super expensive. This clip is gonna talk about expensive stuff that you can actually get your hands on. Honestly, that's what inspired me to make this video. Recently, I tried to buy a MacBook Pro. Let me just say, I've been using MacBook Pros since I was 18, and I usually upgrade every 5 years or so. That's just normal for me. This time, I knew Apple said they were raising prices, but I didn't think it would go up this much. So when it was time for me to upgrade, I went to the official Mac website. So I went to select the MacBook Pro. My old 13-inch model isn't available anymore, so I'll go with the 14-inch. I picked the color, screen, and chose mid-range storage and memory for my graphic work to be safe. After selecting everything, I noticed that needed accessories like cables are included. I'm used to that by now, but what I'm not used to is normally, when I use a MacBook, I buy the software outright, so it's permanently installed on the device. But this time, there was no option to buy it outright. It's all switched to monthly subscriptions now. Anyway, after I finished everything and checked out with the specs I wanted, the total came to $5,186. If you convert that to Thai baht, that's over 170,000 baht. Seriously expensive. When I bought this machine, I picked specs that were pretty average for everyday use. I didn't go for the lowest, but I didn't max everything out either. It wasn't even 100,000 baht back then. So now, seeing the price almost hit 100, I finally get what people mean when they say, wow, chips are expensive. This is what it feels like. So I wanted to get a clearer answer, like, hey, where is all this expense coming from? And, you know, I've always reported and written about AI and the whole bubble thing. If you've been following me, you'd know. But today, I want to dig even deeper. When people say the bubble is about to burst, just how likely is it to actually burst? Let's try to find some numbers and lay them out side by side for comparison. How close are we to the bubble actually bursting? So if you're someone who's curious, like, hey, I'm frustrated, I really want to know where all this expense is coming from, if it's going to get even more expensive, and whether the bubble will burst or not, this is the video for you. Expensive chips are supporting this very tangible Choke Sai Money Monster video. Just scan this QR code right here. Or if you want to support the Sai Money Monster channel, it's super easy. Just hit like, share, or drop a comment to chat with us. And don't forget to hit subscribe for us too. Or if you want to support the Sai Money Monster channel so we can keep making totally independent content like this for a long time, you can become a member. Thank you. Goodbye. Wait, not goodbye. Thank you. Look, honestly, pretty much everyone already knows, and I definitely know too, that Apple recently announced a price increase. But I really didn't think it would go up by this much. So I wanted to find out first, what exactly is the reason for such a big price hike? So I decided to do some deep research into it. Apple said it's because the price of memory chips has surged significantly, which is pushing up their overall production costs. The main reason it's gotten so expensive is really this AI boom. That's the key factor forcing Apple to raise prices. And about Apple's price hike, they officially announced it on June 25th, right? It was an official announcement. I've been using Apple for over 20 years and never switched, but now I'm honestly wondering if I should keep going or just stop here. And you know, I've never seen them raise prices in the middle of the year before. Plus, they're raising prices at a time when I'm looking at it like, what's actually new? The M5 chip? Is there a new size? Not really. It's been out for a while, and now the price is going up. That's about it. The MacBook Air is up 18%, the iPad Pro is up about 20%, and the biggest jump is Apple TV, which went up 54%. It really makes you feel like this whole chip war with everyone fighting over chips and driving up prices, like they're fighting over them in the US, China, Taiwan, but the impact is hitting us too. In this video, I'll explain so you can see whether this AI boom, this so-called bubble, is actually a bubble or not. But the investment money pouring into AI is surging. You can see it clearly in this graph. Notice that in 2020, before ChatGPT launched, the 4 major technology corporations in the United States collectively poured money into what's called CapEx, capital expenditures, which means long-term investments. In 2020, their combined capex was $90 billion. By 2023, that number increased from $90 billion to $147 billion. In 2025, it's projected to soar to $410 billion, and by 2026, it'll reach as high as $725 billion. That means over 6 years, CapEx, long-term investment, will have increased 8-fold. And all this money is coming from just 4 major companies, which are Amazon, Meta, Google, and Microsoft. Just those 4. And if you notice, the period when they ramped up their investments and increased CapEx is exactly the same time when their stocks surged dramatically. Some people have even given this period a name. They call it the AI mania wave. It happened really fast. If you remember, it was around February 6th. Just recently, NVIDIA's stock shot up, and its market value almost hit $5 trillion. A big part of the market, well, let's say some people, started shouting that AI stocks are the future, and they poured money into AI stocks. If you experienced that period, you might remember that after NVIDIA's market cap hit $5 trillion, and on what date was that again? 02/06. Less than a month later, on June 24th, NVIDIA lost $320 billion in value. Around the same time, Micron dropped 13%, SanDisk fell 10.59%, Apple went down 6%, and SoftBank plunged 12%. And then there's OpenAI, which had been saying it would have a world-class IPO, but now that's been postponed. At this point, let me just say, the problem with AI isn't about those massive, gigantic sums of money. The real issue is that all that huge amount of money was borrowed. It's debt. And you might ask, what's wrong with running a business on debt? Honestly, there's nothing wrong with it, as long as you can generate enough revenue and profit to pay it back on time. So the key question that will answer whether AI will collapse or not is, will AI be able to make enough money to pay back its debt in time? Where should we start? We could look at AI's expenses, its income, or the money invested in it, something like that. Let's start with AI's major expenses first. The information I've gathered does have sources, but it might not be entirely accurate. It might not be accurate, right? Or if it is accurate, I have to say, this data is what you'd call a red flash number. Underline, red flag. According to a report from PIMCO, the capex of big tech, that is the long-term investments of major tech companies, it will end up consuming a staggering amount, up to 94% of the total operating cash flow. That specific sentence, even after trying to translate it into something clearer, still sounds quite confusing. To put it in much simpler and more direct terms, 94% of big tech's long-term investments will be spent entirely on AI infrastructure, which mostly means building massive high-tech data centers. So what exactly does that mean for these businesses? Let me underline that 94% figure once again. To help you really visualize it, if these big tech AI companies manage to raise $100 in capital, then 94% of that $100 is the massive amount they'll have to spend on infrastructure alone. That leaves only a tiny $6 for everything else, such as critical research and development, employee salaries, and investor dividends. It is a very tight margin for any company to operate within. Isn't that too little for creating new innovations? That 94% figure is actually pretty scary, because all the money ends up going into building infrastructure, leaving nothing for things like utilities or other expenses. Back in 2023, this proportion was only 40%, so it's increased a lot. And if you ask, wow, are the expenses really that high, almost like a fixed cost? Honestly, AI should be able to make money. Really? That's what it would take to survive? Someone actually did the math for us. JP Morgan calculated that these big tech AI companies need to generate at least $650 billion a year just to deliver a 10% return to investors. And the reason it has to be 10% is because 10% is the expected return. Essentially, that represents the minimum return investors are willing to accept. Now, let's take a closer look. If big tech AI companies need to make $650 billion, exactly how much revenue are they actually making right now? Let's start with OpenAI, the creator of ChatGPT, to see how much money they're making. Most recently, in 1 year, they made $2.5 billion, but they're losing $1.4 billion a year. Next, Anthropic, which split off from OpenAI to make things safer, and now everyone believes, wow, Anthropic's model is even smarter. As for Anthropic, honestly, if nothing unexpected or any accidents happen to them this year, with the pace they've been making money since the beginning of the year, by the end of the year, they should be able to make about $4.7 billion. But ever since the previous wars broke out, like with Iran and all that, the US government has treated the Anthropic brand on the same level as Chinese companies. So this year, what Anthropic will actually be able to achieve is likely to be only about $2.6 billion. Next, Gemini from Google made $2.5 billion per year. So if we add them up, OpenAI made $2 billion, Anthropic made $2 billion, Gemini made $2 billion, which means all three companies together, AI, made $7.6 billion. But OpenAI is operating at a loss. They lost $1.4 billion. So if you subtract that from $7.6 billion, AI tech companies actually made only $6.2 billion. Let's pause here for a moment. Now we have the numbers. The amount AI should be making is $6 billion, but the actual amount AI made is $6.002 billion. The investment put in this year is $72.5 billion. The amount of money AI should be making is $650 billion, but the actual amount AI made is only $62 billion. That means AI is making almost 10 times less than it should be. Now, many of you might be wondering, wow, AI is supposed to be so amazing, so why is it making so little money? Let's look at the reasons why. Specifically, we're talking about American AI models here. AI isn't hitting its targets, not even close. There are three main reasons. The first issue is the high cost of AI infrastructure and chips. They're extremely expensive and prices are soaring. Basically, they're competing to buy chips from other industries. As everyone knows, chips are the bottleneck in the AI industry. Data centers want as many chips as possible, so they have to pay even higher prices. To put it simply, data centers are willing to pay up to 10 times more for chips than other industries. Here's a case in point. Samsung from South Korea. At that time, Samsung was producing a type of memory chip called DRAM, D-R-A-M, which was in huge demand. DRAM is found in laptops, smartphones, washing machines, pretty much every device. In 2024, they were selling these chips to all sorts of high-tech industries that made their own products. But then, in 2024, the AI data center boom happened. Like I mentioned, data centers consume a massive amount of these chips. They use a massive amount, a huge number of chips, and the way to get them is to outbid others, meaning they pay more. And when they pay more, what happens is that Samsung, SK Hynix, and Micron, the three companies that control 90% of the world's chip supply, shifted 93% of their production capacity to make DRAM for AI data centers. Now, let's look at this chart where we can see what happened. By March 2026, the price of memory chips, specifically DRAM, had soared by 171% compared to the previous year. In addition, other types of chips, like DDR5, became 4 times more expensive since September 2025. The contract prices for PC memory modules jumped by 105 to 110% within a single quarter. This is why the new MacBook I was planning to buy is still sitting in my cart. I haven't checked out yet because it's gotten so expensive. Because the chips are really expensive. So the first thing you can see is that the infrastructure costs for AI are extremely high. The second reason why AI revenue isn't booming is maybe because the revenue structure has been flawed from the start. Some of you might wonder, hey, AI seems to be making money all the time. People are always paying for tokens or subscriptions, so why isn't it taking off? Isn't it just like software? Well, the software industry has been hugely successful, right? This is something that a lot of people misunderstand, the difference between the AI industry and the software industry. The software industry is like a sleeping tiger that just keeps making money. You only need to make it once, and after that, anyone who wants to use it just pays more, with hardly any extra investment unless you want to do some updates, which usually isn't much, right? But AI is different. With AI, even though you build it once, every single time someone asks a question, clicks, or interacts with it in any way, there's a cost involved. So with software, the more people use it, the more profit you make. But with AI, the more people use it, the more the costs go up as well. Let me put it this way. If you can't picture it, it's like when I used to run a clothing store. Every time a customer ordered an outfit from me, I had to pay for the fabric, production, and any materials for each individual piece. So the more people ordered outfits, the higher my costs would be too. Get it? You have to invest to wear them, right? It's no different from AI, where there was a period when everyone expected, hey, the demand for AI is going to be super high. So they invested heavily in expanding data centers. That new Mac I want, they don't sell software as a one-time purchase anymore. Now you have to pay a monthly subscription. And let me tell you, gamers, get ready. Those game discs you used to buy and keep, it might not be like that anymore. It might be that every time someone uses it, someone has to pay the cost. But once people start using AI, they'll get hooked. They'll be willing to pay for tokens or subscriptions, even as the prices keep going up, no matter how high we set them. Honestly, that could actually happen if there wasn't a competitor to the United States called China in this world. So the third reason why American AI revenue isn't booming is because of China. If you look at this graph, you'll see that the United States spent $1 trillion to build AI models. And within just 1 year, America invested $725 billion into the AI industry, which is about 3% of the country's economy. Meanwhile, China spent $102 billion to build AI models, which is only 0.6% of its economy. This means the United States invested 10 times more in AI models than China did. But if you ask whether China really copies America, well, to be official about it, I'd rather not say directly, but everyone knows, right? So you can see that for the same type of work, the American model charges 18.5 cents per task, while the Chinese model charges 4 cents. The quality difference is just a few points, but China basically slashes the price by 76%. At this point, I also told my team, hey, the Chinese models might not be that good yet, but can we start practicing with them just in case they get really good one day? Maybe we can get ahead and grab some top talent. So going back to the first question at the beginning of this clip about whether AI is a bubble and how likely it is to burst, after watching this clip and looking at all the numbers, there truly is a significant risk involved, but it is also entirely possible that it might not burst after all. So there might not be much we can actually do about it. That's why the most effective course of action we can take in this kind of situation is to spread out the risk for every single one of us here.